I have to go to YouTube Studio. I'm semi on time today. Semi on time. Content. Live. I have to put on Do Not Disturb. On. Save. We're going to go to live chat. TrendSpider default. Morning, Chris. Why haven't I still installed this upgrade? It will be updated tonight. It's not installed. Okay, why don't I have... Okay, we're getting rid of all that stuff. And I am going to... There we go. Daddy just got paid. Let's do some scans. I was looking at Pure Storage. Pure Storage did really well. I forget who it is, but John maybe in the Facebook group is big on that one. Scans. I don't think I put that, at a douche. Oh, FBCG, NVDA, QQQ, GOOG. This is interesting. QQQ and the 4-hour algorithm. We've broken above it. I think if you get above 449, MACD cross up. So, okay, core, brokerage holdings, anything else? Most of those I own. Alta. AVGO, CrowdStrike, AMD, Square, IGM, Snap, and GOGL. Okay, that's the same as Google. Yeah. Bitcoin and crypto. Let's say. Nothing in Bitcoin and crypto. Covered call ETFs, NUC, let's see. NUC, JEPQ, QILG. You know what? Let me see where SPY-I. Because I think through this, yeah. I think I got rid of it somewhere in the neighborhood of 48. No, maybe even earlier than that. Maybe 45. But it pays like a 1% dividend per month. So, energy names. No, Tyler, if you got it off my link, you're fine. If you got that link, what it does is the affiliate, when you go to Linktree and you go to Seeking Alpha Premium right here, it just installs a cookie for like 30 days. Then I get credit. But I don't even see, it's different than TrendSpider. TrendSpider gives me a list. It's like a hidden list of email addresses. I get like the first and last letter of the email address, and then the first and last letter of the .com portion before .com. And so I can confirm whether people are on the program or not. And for TrendSpider, you do need to be on the program in order for, to get the updates and stuff like that. So, to get the welcome letters. So I can confirm that. Seeking Alpha, it's like, they whether I get credit for or not, I don't know. I mean, I'm doing okay. Trust me. There's enough people signing up. And yeah, Tyler, I think you'll love it. There's a huge, there's a big learning curve for TrendSpider. I don't think there's a big learning curve for Seeking Alpha because it's more about understanding the fundamentals of stuff with Seeking Alpha. Okay, I've turned on my Do Not Disturb. But Seeking Alpha, I think you'll love it. I think there's great ways to find. And, for me, it just provided a great place. Wow. Leveraged ETFs are huge. DRUP, TQQQ. Somebody I know bought TQQQ and Tuesday during the downturn. This has just been a monster. We're going for another leg up in Coinbase. CONL. I mean, look at that. That's the algorithm right there. I mean, we'll get into it, but there's definitely some Vanguard stuff that got to cross up. Yeah. Low cost ETFs. QQQM, QQQ, and VUG. No, but thank you, Tyler. I appreciate you buying, supporting me, and kind of getting that. But I do think, it's just spiders, sectors, XLG, which is great. XLK, which is great. Let's see the watch list. The watch list is going to have a bunch. We're going to do Melly, AMD, Net, Toast, Coin. This is interesting. Now, this is super interesting. Toast, which was written off, down here at 22, when it went from 25 down to 22.59 just in March. This was one, right after their earnings here. It went up to 22 the day after their earnings. It dropped down to $20.49. I was scared to buy it. That's a nice 20% gain right there, in a month. And that was clear. It just pulled back, hit that gap, and then moved forward. And I identified this 21.59 as a good support level. It's still a little bit expensive for my taste, but I do like Toast. Coin and Crowd, yeah. Okay. Let me just look at my not owned list, see if there's anything else that's kind of interesting. Coin, McDonald's, we'll get in the ARKW. I don't have the ARK funds in the Lyft, Fiverr, KLAC, I like that one. And Square. I already have Square, yeah. Okay, let's go to the Dow. Let's scan the Dow. I know McDonald's is in there. So I might as well put MCD. TrendSpider is whacking up. If anybody's seen the new Tesla seats, they are interesting. Super interesting. Bum, bum, bum. There it is, Microsoft. 3M and Visa. I don't like 3M though, man. That one just keeps. I mean, where you go? Let's see. Let's look at NASDAQ 100. We'll just scan that. Oh, God. ASML, MCHP, BKNG, TXN. I own half of these. MELI, CTSH, GFS, Dollar Tree. Okay, and let's look at S and P. There we go. NVIDIA, 3M, McDonald's, TXN. Nothing. Okay, nothing crazy. Wah, wah, wah. Yes. Okay. Let's go to the 4-hour. Let's see. What do we have moving in pre-market here? Bank of America's down 1.3%. Let's open up our... Somebody actually wants me to look at Nikola. I had a busy day on X yesterday because I was watching the Masters. I'm going to do a quick one today, but I am going to go watch the Masters as well. Snow. Wah, wah, wah. Oh, man. I hate this. I hate this. Ugh. This headline yesterday is what drove Apple and that's what drove Apple yesterday. And then we've got, what do we have? Quant rating changes. Then we've got the NASDAQ slip as major bank earnings. And this, we're going to check in. Citi's great. XLF is a good one. Tyler, I don't own XLF. I own, what do I own? I own Bank of America. I own Schwab. I own Wells Fargo. Unfortunately, I own Morgan Stanley because I thought they would do better with their purchase of TD Ameritrade. I think that's who bought them. I bought them and I just forgot about it, and I still own it, and I keep looking at it. I'm down rather large on it. And I own one more. Hold on one second. I'm gonna look. Excuse me. Let me see. I had a 6-figure day yesterday, close to it. Let's see. I own. Ooh, I guess I don't own BAC. I thought I did. Maybe I got rid of it. Why the hell did I get rid of that? I know I do own it in my parents' IRA, so but I guess I got rid of it. Bank shares. I own NFLX. Square. I guess that's part. Yeah. Wells Fargo, Morgan Stanley, Schwab, and that's it. Larry. Morning. Wow, I thought I owned a bunch of Bank of America. I guess I got out of it. Yeah, I guess I got out of it. That's crazy that I got out of it, but it is what it is. Google's over 160. Apple had a big day yesterday. Do we buy it on this one? I don't know. 172.11. It's got confirmation. I mean, it's got confirmation all over the place. It's finally, boom, turning a little bit. 200 days still moving down. So on a weekly, let's see. Have we returned somewhere? I mean, the MACD is so low on the weekly. It's coming off of an oversold. Last week it was 38. This week we're at 45. Every time you've dipped under the 50-day in the last 4 years, it has come back. So you can see COVID dipped under the 50-day. Here 2018, it dipped under the 50-day. Here in 2019, dipped under the 50-day. Here in 2022, dipped under the 50-day. And for all of 2022, it was under the 50-day for the most part, except for that run up in August, which was a big run up. But you had almost the same exact run down from August to there. Do we head into August where we get a big run up into August now? I mean, that's a possibility for Apple. But yeah, I don't see anything shocking. Chips are pulling back after a great day yesterday. QQQ is down almost 1%. Okay. I'm going to hit record and start going. It's Friday, so we don't do shit on Friday. We may buy a triple levered ETF on a Friday just for shits and giggles, but I'm going to be watching the Masters. Good morning. It is Friday, April 12th. It's Masters Day, second day. I got to go because 8 o'clock started the first round continuation. There was a 2-hour weather delay. The rest of the weekend weather here looks fantastic. Maybe a little windy, no rain. So it should be a good day of sitting on the couch and doing absolutely nothing again. What happened yesterday? I mean, what happened in the markets? I tuned into the markets halfway through the day. I was like, oh my God, it's kind of what I told you. It's what again, the free newsletter. I said for the past 2 days, buy the dip. I said buy the dip. There's nothing about it that wasn't a buy the dip market. What we had a, here's all the newsletters that I put. 410 CPI crest the market, buy the dip. Did you buy the dip? Yesterday, CPI was wrong. PPI is right. Buy the dip. 2 days in a row, buy the dip. And that newsletter is free. Absolutely 100% free with great great trades in there. In fact, one of the trades that I've gone over is let's see. How about this? Hold on. I'm going to hit stop. Why didn't I get up. Twitter. Why didn't I do this? Let's see. Quant rating changes. This is the one that I wanted. Yeah, this is it. Morning, Daniel, even though you retracted it. Let's see. So let's check in on, remember an NVIDIA trade? I mean, let's start Friday off with a checkup on a strategy that TrendSpider put out there. You do not need TrendSpider to implement this strategy. All they said was the Bollinger Bands, buying the lower Bollinger Band on NVIDIA has been extremely effective over the last 2 years. You can see exit 10% or minus 5%. That's it. That's a strategy. Simple as that. Let's check in on it. You're still in the position. That's just from what, April 5th last week? Still in the position, cruising towards a 10% profit. Simple. Again, let's start out Friday saying this. Having a strategy for your trades is the key to success. Whether it's trades or investing, having that strategy is in there. Going in with a, hey, Gary told me to get into this one, so I'm going to go. That's not a strategy. Going in with a time frame, without a time frame, is not a strategy. Going in without understanding when you'll get out, that's not a strategy. You have to know when you'll get in, when you'll get out. You have to understand, okay, if it's a technical strategy, you're going to use the charts. If it's a fundamental strategy and a story, you're going to get in just based on the story. There's nothing wrong with the story play. That has worked many a time. In fact, for many years, people did stories instead of charts. It's just now they do charts. This was an interesting one. Dan Ushman yesterday, and we talk about strategy all the time. Someone asked me why TrendSpider is so expensive. My answer is really, it's not really though. When you factor in all it can do and add up what it could cost ad hoc piecemeal the same capabilities together, it's a very good value. To get the same capabilities, you need a charting tool, a scanner, a backtesting tool, an options flow tool, a pro news feed, a seasonality tool, an insider trading tool, a data flow tool, and that's just the top of my head. All of this is inexpensive to the offer. The data feeds, infrastructure, engineers, so the price can't be cheap in terms of dollar. We have to instead compete on value. That's what they do. And again, I posted, I'm a former paying customer of TrendSpider. I'm a current affiliate. I can't trade without it. Yes, I paid the prices that I promote. Now I'm an affiliate. Now I've gotten good enough at this that I can sell folks the tools that I use. And so being able to be an affiliate of this one, I still think the value is there. Yes, it's expensive. It is $892. You save $1,495 though, because it's normally $1,488. So again, I think that there's an opportunity here for you to get your strategy in. Is it expensive? Yes. When you understand what it can do, no. Continue listening to this. We'll go over the 4-hour algorithm and a lot of this stuff. That's what I use. So understand, yes, Dan says it's expensive. He knows that. The cost of this stuff is hugely expensive as well. So let's take a look. I said it before. NASDAQ and S&P futures dip. Major bank earnings are in. Citibank, killed. JP Morgan, beat. Yawn. They were up so much. Wells Fargo, killed. I said it before. I own a couple of these. I own Wells Fargo. I own Citi. And I own... I figured out I don't own... I guess I sold Bank of America at some point. I still own it in my parents' IRA that I manage. But yeah. So we'll take a look at some of those. But here, QQQ. What happened yesterday, we took off. We absolutely took off. We'll go over Apple here in a little bit. What I wanted to point out too, Seeking Alpha is Seeking Alpha Premium, where you can read all these news stories that I post. If you import your portfolio into Seeking Alpha, you get these. I imported the core portfolio. And if you want to see the core portfolio, you can do it for free. SavvyTrader.com. And I'm savvytrader.com/daily stock pick. You can go over here. It's down here at the bottom on Linktree, linktr.ee/daily stock pick. There are two portfolios. There is a core portfolio and there is a trading portfolio. The core portfolio is free to follow. And so I imported into Seeking Alpha this core portfolio. There's 35 positions. There is the quant rating is what is really good about Seeking Alpha. And there are four increases in the quant rating for 4 stocks in the core portfolio. First is NVIDIA. It went from hold to buy. Second, we can look at going over here and look at it. So we pull up NVIDIA in Seeking Alpha. And the quant score comes up over here, and it's still hold. It bounces back and forth. I think it's an upgrade. Yeah, NVIDIA's been a hold here, but it should get a hold up, an upgrade to buy here. Let's see. NVIDIA strong buy. Qualcomm went to a strong buy. I gotta go to different windows here. Qualcomm went to a strong buy. The chips yesterday kind of flew, and you can see Qualcomm strong buy. Look at that. Just moved to a strong buy. Last time it was a strong buy was at 166. You're trading at 175 right now. In pre-market, it's 171. If we go over here, Exxon went to a strong buy. Energy. We talked about energy just being the one that you want to do. Well, here, strong buy. Quant. It moved to a strong buy at 121. It's trading at 123 in pre-market. Again, this is number one in the energy sector from the quant rating. What's another one that went to a strong buy? Palantir. Palantir has been one that has been lagging. And I do think at some point in time, this thing gets into the S&P. I think the valuation is absolutely crazy. Everything else is an A in the quant. When you go to the valuation, if you guys have listened to my interview with Steve Kress, he says the number one thing that he looks at, though, is the PEG. And this is the price to growth and the forward. And specifically, Palantir is not crazy. Now, it's relying on the company's growth projections, and sometimes those are a little crazy. I don't think Palantir is over emphasizing this. But if you look at the software stocks, it's number 5. Palantir, BMR is number 1. Hold on one second. Stop. She's trying to get the other dog out of her bed. That's not good. But yeah, Palantir went to a strong buy. These are the quant ratings. When you import into Seeking Alpha your portfolio, you can get these in a daily email. That's what I did. But if you want to follow the core portfolio, it's 35 names. And if we go and we look at the comparison, we can look at it QQQ over 1 year. The core portfolio, which is just 100 shares of each of these 35 stocks. There's not a weighting. It would be doing even better if I had a weighting. But it's just up 30%. NASDAQ is up 19% over 1 year. It's a great core portfolio. If you were looking to get into trading, that's it. What happened to Apple yesterday? Apple was up like 4.5%, somewhere in that neighborhood, 4.33. Apple said they're going to focus M4 chips on AI. They haven't confirmed it. It's a rumor. That's what Bloomberg reported. Apple soared. If anybody's listening, hello out there. Hello. Apple is turning around. Apple's getting a little button hook on the bottom. You have an entry today at 172. You're trading at 175. Hello. I'm sorry. You're trading at 173. 172 is the thing. Should you get into this? If you don't have Apple in your portfolio, you're kind of nuts to not have it in your portfolio. It deserves a place in your portfolio. Does it deserve to be 60% of your portfolio? That's what it is for me. The algorithm here, even though you see, it's been getting you in and out. And the reason it's been getting you out, again, it's based on the MACD. And you don't need TrendSpider for this, but you do need my 4-hour algorithm to understand these entries and exits. But it gets you in and out. Now, the MACD fluttering up and down. Again, a large portion of my algorithm is the MACD. When it gets you in, hopefully you're making money. When it gets you out, there's some moving averages in there. It got you in at 172. Now, what's the performance of this? If we measure this and we go back testing this for 24.3 months, you make 25%. If you got in and out, even with these losses, you've made 25%. You win 28% of the time. Your average win, 8.99%. Wouldn't you like to win on average 8.99%? Because this keeps you out of losses. Your average loss is only 2.23%. You win 28% of the time. Again, you don't win a large portion of the time, but look at when it got you in here. And it got you out. Does it? It plays in a middle ground. So it tries to play in the middle ground on this. But if you're not in Apple, I think you absolutely should have a position in Apple. Read this article on Seeking Alpha. How about these great ETF trades? Look at this. This is what's interesting. This is also part of Seeking Alpha. AMZU, Amazon Direction, Bull. That just got upgraded to 4.99. We've talked about Amazon, and I have a paid newsletter about Amazon from last week. How it was great. It was trading at like 179. Did you get in? Because we now have passed the all-time high at 188. Get ready for this one to take off. It will be a $220 to $250 stock sometime in the next year. Sometime in the next year. The algorithm makes you 24.7%. Buying and holding makes you 23.3%. Your average win is 10.69. Boy, don't you wish you got in at that 177 price. Look at all the confirmation you have. The MACD has not soared up. The RSI is a little bit high at 79. We don't buy on a Friday. You don't buy on a Friday. You wait for this one till Monday. You wait till next week to buy this one. But what's interesting about this is, look, it's AMZU, which is 2 times the daily volume. The daily price. AMZU 4.99 in the quant. These are great. I mean, these ETFs. Notice, by the way, the second is MSOS 2 times daily. The third is Long Meta 2 times daily. The fourth is a ProShare Ultra. This is 3 times levered. The semiconductor USD. Grayscale Bitcoin, number 4. There is a lot to like in this. Uranium. Do you like Bitcoin? BTF. Uranium, URNJ. Long NVIDIA, 2 times long NVIDIA. That one's down there. SMH, another one. This is what you get with the Seeking Alpha app, is this great quant that identifies, hey, what are the ETFs that you want to buy right now? And a lot of them are levered. So let's take a look at today's biggest winners. Paramount Global. This is Broadcom, Micron, Apple. What are the losers? Global Life. We'll go into this one. Global Life was an interesting one. CarMax, they had horrible earnings, down 9%. Fastenal down 6%. Gen Digital, Bio. That's another great thing about the Seeking Alpha app. Snowflake, storm coming. Let's go into Global Life real quick. You know what? I'll save Global Life. Let's look at Snowflake, because I have said that Snowflake is a buy, anything under 200. Look at that chart now. Here, TrendSpider posted this chart. And again, you don't need TrendSpider to look at these charts or follow them. You can do it all you want. Look at how they say lower low, higher low, higher low, higher low. Is this a higher low right here? Are we starting to see a turnaround? Higher high, lower high. Are we starting to see it? I say it's going back to 200. We're at 157. Algorithm got you in at 154. Again, we're looking at that same pattern that you just looked at. We've got a gap up here between 194 and 230. This is the new CEO that took over. And Frank Slootman, who was the former CEO, is now chairman of the board. Boom. Any reaction in the market is an overreaction. That doesn't mean that this one's going to recover when it just gaps down to 190. It got way down to 150. When's the last time it was at 150? It was way back here during the November lows. Is that crazy? The October lows, the November lows, whatever you want. Is it nuts to think that this one's going to come back? No. This is the range that you're seeing. This is a weekly chart. And you're seeing it broke out above that range, provided an opportunity for you to get out if you wanted to, because the valuation is crazy. My average purchase price, just so everyone knows, is $185. It's a smaller position, 4-figure position. So it's definitely a trade. I will be adding to this one. I have been waiting to add to it. I will be adding to it. Algorithm got you in at 154. We're at 159. I feel comfortable adding it here. I think we're going to see a turnaround in that one. There's another one that I own that I wanted to be perfectly honest with everybody, because it's down. Shopify. I thought it's important to tell folks. My average purchase price on Shopify is $72.10 right now. I have a mid five-figure position in the company. I'm not bullshitting people when I say this one is going back to 80. It may have further downside, but I will keep buying. I am right now. Average purchase price, $72.10. You guys see I'm in the red. Is that bad? No. Look at the gap that's up here. Am I buying right now? No. The algorithm has me out. I will wait until the algorithm gets me in. It is my safety. That's how I use TrendSpider. Again, that's how I use TrendSpider for this one. I want you to understand that there's a system involved here. And then I'm not just trading blindly. There's a system involved when I make these decisions. So take a look at it, Snowflake and Shopify. I wanted to go over those two. Now, Global Life, I think this TrendSpider post says all about it. Global Life absolutely massacred after allegations that the company partaking in insurance fraud. 10 years of gains erased in one day. We can go and take a look at the chart, but what I want to point out to you is this is just a short kind of report. Doesn't mean that they've been found of fraud. The report said that they basically took out life insurance on people who were dead or already dead and wrote policies on them. This is crazy. I mean, this is a crazy, crazy stock chart. We're not going to look at it on a 4-hour because yesterday's just chart looks nuts. It crashed from 110 down to 49 right now. I mean, the low was 38. I want you to look at this one because I say it all the time. Any reaction in the market is an overreaction. This may provide you an opportunity to actually trade this one. I don't want you to trade it on a long one. Any report of fraud is going, if there is fraud in this goes lower. If there's fraud, it goes lower. But it's just a report and it provides a good opportunity for you to trade. I would say trade this on a 5-minute chart because look, we're putting in that source right now. It is up 16% in pre-market. If you bought this at the end of the day yesterday at 49, you're at 57 right now. This is the type of stock you want to look at for some volatility and you want to trade it on a shortened time frame. That's what you want to look at. So take a look at it. Again, I'm keeping it short today. I'm just going to go over a couple of things, but Global Life is one that I wanted you to take a look at. All of these are going to be in the newsletter. There's going to be more charts in the newsletter. There's going to be more stuff. So sign up for the newsletter. It is free. dailystockpick.substack.com. And again, remember, all the charts are done in TrendSpider. You can sign up for TrendSpider. You can sign up for Seeking Alpha Premium. One other one that I think is important is Alpha Picks. And what does Alpha Picks do? We're coming up on the 15th next week. You're going to get another Alpha Picks. What is Alpha Picks? Well, Alpha Picks is 2 data-driven stocks every month. And it provides you a great opportunity. If you're new to investing and you want to look at, how do people look at stocks and how do they evaluate them? This gives you everything that you need. Here's the analysis. Every month you'll get at least 2 articles. One on, this restaurant stock, Eat. Then they do it portfolio review. This is Cruise to New Heights. This is Royal Caribbean. So, just ruining it for you a little bit. You get access to the entire portfolio. You get access. How do you do it? Well, there's 3 kind of strategies that they promote. Buy at least 5 of the strongly buy stocks in the Alpha Picks, and you just go over to the portfolio and pick 5 that you like. You can research them, buy the entire portfolio using the allocations in the portfolio tab. You can do that. Use the Alpha Picks as an idea generation tool. That's what I use it as. And it's a really, really good analysis of it. But those are the tools that I use. That's it. Simple as that. Let's go into the social requests. Taryn, NU for long-term growth or just a trade. Let's look at NU. Is this Nucor? New Holdings. Let's look at it. Oh, that doesn't look good. But let's take a look real quick. It looks like it's coming back. What is NU? Let's go into FinViz and look at NU. Again, you don't need any paid tools. NU is financial. Cayman Islands. Looks like they make about 1.3 billion PE. Super high. Super high. Target price $11.66. It's trading at $11.55. Take that with a grain of salt. It hasn't been covered in quite a while. So I don't know anything about this. There's no insider trading. There's no nothing. Let's take a look at it from a Seeking Alpha standpoint. Nucor, it's a hold. The valuation it's ranked 28 out of 66. Let's look at the valuation for quick. Look at the PE. I mean, that's trailing 12 months. That's high. I mean, that's 400% over what the sector is trading at. Do you want it? It's ranked 28 out of 66 in the diversified banking group. I think there's a lot more that are better. Let's take a look at the chart. Taryn, take a look at it. I mean, I don't know anything about this. It could be doing better than I actually believe. When we take a look at the weekly, it looks like it rebounded nicely, 50 days moving higher. I mean, again, there's no perfect way. If you know something about NU and you think it's a long trade, go ahead. If you don't know anything about NU and there's no story there, don't do it. I don't think it's worth it. I mean, look at that valuation and it's crazy. I don't know anything about it. Rodney, Verizon, and please rate the dividend yield as well. I'm new to investing. Okay, here's what you have to know about Verizon. Verizon is in a business, and it's the data business because it's just voice and data, that is heavy capital. And so they have to spend a ton of money to make a ton of money. That is what Verizon is. The impetus of Verizon, think about it this way. Have your mobile phone bills been going up? Because if you have your phone bills going up, I can tell you what's not going up. And that's Visible. And Rodney, thank you for asking this. I didn't plant this question, but Visible by Verizon is my phone company. When you use the link in Linktree, you get $20 off your first month. Check out the plans. There's two plans. There's a $25 plan, which is the one that I'm on, which is perfectly fine for me. And then there's a $45 plan. If you're paying more than $45 per month for your line, I have no idea why. This is virtually unlimited data. Mobile hotspot, unlimited. International, you get one free global pass a day. You know what else you get? You get your smartwatch included. So $45 a month here on this plan. That is fantastic. Now, Verizon, as far as a stock, here's what I want to show you. This is a stock that probably is rebounding. Is it going to rebound all the way? I don't know. This hasn't been a great buy. I mean, we can take a look at a monthly, and this is like AT&T. When you take a look at this stock, do you want to hold this for 10 years? I don't think so. I mean, again, they haven't proven themselves. You've got a negative trending 50-day, even though you're moving positive on the short term here. You've still got a negative 50-day. So are you heading into this type of thing? Look at how big that bounce was back here in 2004. And you just continued down. Is this where you're going? Or are you in some type of rebound like this where it was 2000 and all of a sudden data's a big one? Verizon here we can go over to Seeking Alpha and we can look at this. From a quant standpoint, it's a hold. I will tell you that the valuation is B. It's not crazy. It's the growth. In the communication service, it's ranked 4 out of 28. The other three, I wouldn't even probably put money into. But, you can see it's 3.45. AT&T, just a nightmare of a company. AT&T and Verizon are the two that are the biggest. We can take a look at from Wall Street standpoint because this is heavily covered, 27 analysts. It's a $45 price point. Now, what I want to point out to you is if we go over here to dividend, there are a couple different places that you can look for dividends. Here in the dividend, the forward dividend, 6.62. So your annual payout, you're paying $40 for the stock. Your annual payout forward is 2.66. They could absolutely cut that dividend or they could increase the dividend. The last dividend they announced, the X date is 4/9. That is just a few days ago, so you will not get paid out. Everybody holding that on that X date will get 67 cents. It's a quarterly dividend. Is it good? I mean, you got to be. Here's what I say about dividends. Dividends are great, but what happens on that payout date? So when you're here on Verizon, so your ex-dividend date is just, hey, you have to hold the stock on that date. Say you sell it on 4/10. Well, you'll still get the dividend. The payout date is 5/1. On 5/1, you'll get 67 cents, even if you sell it on 4/10. But what happens on 5/1 is if that stock is trading for $40, 67 cents is taken out of the stock because they paid it in dividend. So essentially, rather than investing in the company, some companies pay out a dividend to shareholders. And that's to give them some income to make sure that they're whole, blah, blah, blah. I'm not a big believer. Now, this is an A+ dividend consistency. The company's track record for paying this is A+. The company's ability to continue paying the current dividend is a different story. And that's what's always dangerous. If these guys cut their dividend, because it is a big dividend, 6.62. If they cut their dividend, the stock will get killed. So Rodney, my personal opinion, it depends on how old you are as far as investing. If you're younger, dividends make no sense. None. You are not investing in order to make income when you're younger. You are investing when you're younger for growth. That's my personal opinion. There are different thoughts on this, different processes. Not everyone has the same risk tolerance. So understand first off, what's your risk tolerance? Mine is I would rather have growth and I'd rather have risk than take the safety of a dividend in a stock like this. Because the safety of a dividend, look at that. You don't have a safety in a dividend in this one. It's trading for the last 10 years between 25 and 62. I'm sorry. This goes all the way back to 1994. So this is the last 30 years. The last 30 years, you've had that range. Last 30 years in Apple, if we go and we look at Apple on a monthly, that one is going to have you in a crazy, crazy range. The last 30 years in Apple, if we go back to 1994, let's see, you haven't collected a dividend, but look at how stable that growth is. If we go back to 1994, you were trading at 32 cents. You're trading at $175. There's your difference in dividend. I mean, that's the difference between growth and dividend. So, Ronnie, I don't want you to focus on the dividend. I want you to focus on the opportunity of the company, where your risk tolerance is, and how you're going to grow your portfolio. Again, it depends on your age. I don't know your age, but it depends on where you're looking at. I think the dividend's a great one. But I think, if you're Walter, who is, 72 and is looking for income based on his retirement earnings, and he wants a safe dividend, and he wants something that's not going to lose 40% in a couple of days, something like that. Apple's not going to lose your 40% in a couple of days, but you are going to lose, 10, 15, 20%. Apple year to date is not up. So, Verizon year to date, we can take a look at it. Let's see. Let's go. Verizon year to date is up 6.55%. Plus, you're getting a nice 6% dividend. If you look at Apple year to date is down 9.08%. You're getting a 0.58% dividend. So it depends on your time frame. Verizon has been a good one. It's on the rebound. Looks like it's okay. But I don't want you to focus on that dividend, and that's why I want you to understand dividends. And if you want to understand dividends a little bit more, you can read up on it. Go to Investopedia. Don't go to a money guru on dividend investing kind of thing. They're going to steer you towards dividend. I'd rather have you like an Investopedia thing and just get the facts. So hopefully that helps, Rodney. Shep. Taking an AI break, question mark. Personally, I'm in wait-see mode for NVIDIA and SMCI heading into earnings. Since joining the S&P, SMCI is doing nothing. FYI, Shep, I said historically, if you look back, I said historically, stocks don't do crap after they're in the S&P. They lag. They underperform the market when they're added to the S&P for the short term. That's just the nature of the beast. Typically, it's a sell the news, sell the event, buy the news, sell the event kind of situation. SMCI down 1% today at 924. I'm holding this at 1,050. I'm still holding this in the 200s in my brokerage. I'm just sitting there and waiting. SMCI, look at Taiwan Semi. Taiwan Semi announced a record production of chipset. And what happened? Well, NVIDIA didn't go up. SMCI didn't go up. We don't know how many they're selling. We don't know how many SMCI is installing. They have an enormous hurdle because last year in May was when these two really took off. And when you take a look at this, SMCI here, it is still a strong buy in the quant. And the reason is because the forward guidance of their gap, of their peg, they're trading 56% below. Now, NVIDIA just got an upgrade yesterday. They said ignore, I forget who it was, but they said ignore the retractors, and it's going to go to $1,000 again. You're trading at $900. You know, are you getting back to 2,000? Are you going to 4 times your money like you did last year on this one? No, you're not going to $4,000. Are you going to 1,000? Probably. It's probably still in its infancy stages. So I don't think AI is taking a break. I just think these two have taken a break. So, you know, I agree with you. Holding until the next earnings. If you want to trade something, GL is a great opportunity to trade. You know, find the ones with volatility to trade. These are ones that have more of a story than a trade in my mind. That's why I don't trade them on a daily. I trade them on a longer term basis. And am I okay holding SMCI at 1050? Yeah, I am. TG Homie from Spotify. What's an ideal cash to portfolio ratio to have to allow yourself to add positions during pullbacks? That's personal, kind of what's your comfort level? I have had times where I am 99% invested and going into all-time highs. I have had times where I am 70% invested going into all-time highs. You are at all-time highs right now. I am, let me see. I don't even know. Does it tell me in Fidelity what my cash position is? I don't think so. I think I'm somewhere, but remember, I'm in a different place than you are, TG Homie. I don't have a job, so I don't have income. I need cash. So I have to have cash on hand. Thankfully, that cash is getting 5%. If you are in a high yielding save, I'm in Fidelity. Fidelity pays me 5% to have cash sitting there. Am I happy with 5%? Absolutely, I'm happy with 5%. I have a larger than normal cash position. In times when you were getting 0% and the market was flying because interest rates were way down, does that make sense to have cash during a pullback? No. Just be invested 99%. It depends on your outlook. I would say when you get to positions in a retirement account, here at all-time highs, in a retirement account, I would say you want at least like 5-10% cash. So start trimming some of your things that are at all-time highs and maybe adding to them during the pullbacks. I mean, that's probably the best advice I can get you. But I will tell you, cash is a losing commodity. Yes, it feels good to have cash. If you have cash in your retirement account, make sure you're putting your money to work. 5% in a retirement account is perfectly fine as long as the cash is going to work. You shouldn't be sitting in 50% cash right now. That's my personal opinion. But here, even at all-time highs, heading into earnings season, you should have that money working for you. So I don't think there's a perfect, ideal cash position. It's personal. You know, this is why, one of the things, TG Homie, I tell folks, make sure that you're, monitoring and journaling your trades. So if you want to understand where your cash position is, understand where your cash position is today. Understand where it was 5 years ago. Understand where it's going to be 5 years from now. Understand that, completely refine your cash position to where you're feeling comfortable, and then go at it. I mean, cash position in say you have, you live paycheck to paycheck. You can't have a cash position. You should absolutely be more than 100% cash position. You shouldn't have investments if you live paycheck to paycheck. If you are somebody like me who lives off of, just kind of the earnings that I get, I do make money at the podcast. I do make money with the MLS gigs. But my large position, I need at least 6 months of cash, 6 to 12 months, because if for some reason I have to go back to work, it's going to take me 6 to 12 months to get a job. It's just the way I look at it. So it's just lifestyle, I think, in a brokerage. In a retirement, I typically don't have a ton of cash. I can tell you, I think I'm 95% invested right now. Let me see. I'll tell you. Let's look at my positions. Oh, it's not coming up. Oh, there it is. Ooh. Oh, okay, we're 2 minutes. I was gonna say, am I having another 6-figure day? Let's look at, for instance, my Roth. Let's see. Hoofa. I am 99.9% cash invested in my Roth right now. I don't have cash for a pullback. I am 99.9% invested. My IRA, I have a 2% cash position. That's my thought. So there you go. If you want to follow me, follow me. But again, it's personal. Dennis, highly appreciate what you do daily, not stock specific question. I have a 401k with Fidelity. My employer's matched bi-weekly, and I opened a brokerage account. Should I have set and forget funds also? I think what you're asking is, should you take money out of your paycheck to put into your brokerage account along with 401k? It depends on your situation. Dennis, this is more of like a financial planning question than a stock question. And a FIRE question, financial independence. I never had a set and forget it. I would always make sure that I had a number in my mind of what I wanted at the end of the month to actually put into investments, into my brokerage account. My brokerage account by far is my largest account. I have more in my brokerage account than I have in my retirement accounts. Probably twice as much. I haven't really looked at it recently, but I have twice as much. I was never I was always so focused on living beneath my means that I always had money at the end of the paycheck and the end of the month to put into investments, and I would find it. So I don't think, for me, set and forget it isn't a thing. But if you're somebody who isn't going to remember, if you're somebody who isn't very good with budgeting and limiting your expenses, set and forget it works. That's why Acorns is one that's a good one. Just my thing is, I don't want to pay a fee for any of that stuff. You shouldn't have to. Fidelity has it free. What I would do is talk to your financial advisor at Fidelity. You're given one. If you don't have one, let me know. I can hook you up with Stuart, my guy at Fidelity. But you should talk to a financial planner about that kind of thing because they will gauge your risk tolerance and your individual. There's no perfect answer for that. It's all individual. Noble. Nicola, where do you think they are headed with potential reverse split and down 26% this week? It's going bankrupt. You can't roll a freaking truck down a hill and expect not to be bankrupt. This is going bankrupt. Is it a good trade? Sure it is. Algorithm loses you 70%, which is fantastic compared to losing 90% over 2 years. This is going nowhere, Noble. If you want to trade it, trade it. This is going bankrupt. I have a friend who was the chief marketing officer for this. I still don't know exactly what happened, but he was the chief marketing officer for this company during that time when Trevor Milton rolled a truck down a hill. Trevor Milton got jail time for that. This is a joke of a stock. Come on. It's not good. I mean, we can look at the financials. Financials are an absolute F. Valuation. Let's look at valuation because that's a C+. Let's see. PEG, they don't give any forward guidance. They're not making money. EV sales, I mean, they're 1,000% above the sector median. This is enterprise value to sales. Enterprise value to sales forward, they're 158% above it. Price to book, they're underpriced to book, but still it's a crappy company. I just don't understand why anybody would do anything other than trade this. Some of the stocks that got cross-ups, I will put them in the newsletter. XLK. XLK has a cross-up here. We can look at 208.75. You're trading at 206. FBCG, which is a great ETF. This is the blue chip growth from Fidelity. Look at that on a 4-hour. Fantastic. 38.69. Boy, at 33.28 at all-time high. This one seemed horrible to get into. Look at that, 13% gain. That was just from the beginning of the year. Now, what happened? You went way down on the MACD, reset itself. You know, you're 38.69. You're trading at 38.35. NVIDIA, cross up. We had a nice big day on NVIDIA. Buy it under 900. I'm telling you, buy this one under 900. If you're waiting for that 744, may never come because we're getting closer to earnings. Earnings are coming up, May 22nd? Fantastic stock. QQQ. It is down almost 1% today. This got a cross up here. Let's see, 445. You're trading at 441. I've said it before, this 440, anything under 440, just buy it. Just buy it for the next leg up. You should have this in your portfolio. Absolutely. Google has a cross up. We're at 160. And this one, I think it's still on a run. I don't think it ever got you out. Yeah, we're still on a run from 136. Gets another leg up at 160. This one has earnings coming up next week, April 23rd. So in 2 weeks. Google. Heading into earnings, just buy it. Microsoft. Here we go. 423. We're kind of capitulating. The Bollinger Bands are cinching up. You're in at 413. Anything under 420 on this one, just buy it. Just buy, even at 423, if you don't have a position, just get into it. Ulta, we talked about yesterday with ELF getting a cross up. We can look at how that one performed. Is Ulta putting in a bottom here? I don't think so. We're at 448. Algorithm got you in at 451. Algorithm makes you 19%. You make 9% over just buy and holding. There is a nice gap up here. That 50-day still moving down. I would wait until you have confirmation on this one. Broadcom, AVGO, big move yesterday. Huge move. This was a big move. Right now, it got you in at $13.82. I think my average purchase price, let me tell you where my average purchase price on this one is. I don't even know which account I hold it in. I think it's in brokerage, to be honest with you. Let's see. All positions, AVGO, full disclosure. Average purchase price, $13.55. So I'm still in the green. I'm still in the green. AVGO. This is setting up. Look at the Bollinger Band cinching up. And you've got confirmation above that 9-day. Where's it going? I think it's going higher. You know, this isn't a short-term trade. Their earnings aren't coming up till May. AVGO. CrowdStrike, anything around 300. I think I bought it 310 or something. Let's see. Do I own? Yeah, CrowdStrike. Let's see. Average cost 323. You're trading at 313. Algorithm says 317. I will probably buy more. Look at the gap down to 298. I want to trade in this range. That range right there is where I want to trade it. And I want to buy it. That's why I bought it at, 323? 323. I think, let me see. Total of 30 shares. So it wasn't much. Wasn't much at all. Starter position. I will buy this one for the long term because I am not sure. And I want to wait for the earnings, CrowdStrike or PanW. If PanW reports bad earnings, I have a very low PanW cost per share. Very low. So understand that it's super, super low. And I'm just trying to make sure that I am exposed to the cybersecurity system. AMD. AMD is a cross up. This one, the valuation's a little nuts. But AMD has shown you they can go to 200. AMD has shown you they can go to 200. 170.47. You got a little bit of a gap down here to 146. I don't know that necessarily gets, it looks like it might have been covered already, but it gapped up. So I don't know if it's still uncovered. But yeah, algorithm makes you 6.9% buying and holding. And I've held this one for a long time. Buying and holding makes you 75% in this one over 2 years. Square, IGM, Snap, Melly, Aristanet, NET, NET is Cloudflare. Cloudflare got a cross up. Aristanet already has one. Look at this one. I mean, boiling up right here for a move higher. Look at that MACD. Earnings are coming up here on May 2nd. Cloudflare could get a nice little bump up there. Again, you're looking at a move higher here overall. 50-day may get a golden cross. So are we looking at a higher? Are we going back to 157 on this one? I don't know. Coinbase got one. And what's interesting is CO NL, which is the double levered. This one got a cross up. And this one on the 4 hour, you can take a look at 73.88. Now, the algorithm here makes you 542% on this. Buying and holding makes you 203%. Understand this is a decaying asset. It is not one to take lightly. But look at that cross up on Coinbase. That is right down here at the MACD. You're down 5% today. This buy at 73.88 could be a move higher if we start to go. That's an interesting. All of these will be in the newsletter. So there's plenty more. XLG, which is the top 50 of the S&P 500. That gets a cross up. We already went over XLK. XLG 42.18. Is this one a crazy one to buy? These are the top 50 names in the S&P. Overall, look, it's still in a bullish trend. You look at a monthly on this one. This is still in a bullish trend. There's nothing necessarily like crazy about this. The MACD's been higher. The MACD was at 3.43. You're only at, 2.6 right now? The RSI is super overbought, 70. But we're in a good economy. It's a buy the dip economy. So when you see a dip and stuff, you want to buy it. And so all of these show bullish tendencies right now. TQQQ. We have a bullish uptick on that one. Do you want to buy it on a Friday? Probably not. We don't know what's going to happen. Is Iran going to do some missile on Israel? Do we have a Middle East war again? 61.71 on TQQQ. If you can get this under 60, I think you're okay. Because I think under 60, at some point in time, you get above 60. Even though it's a triple levered decaying asset, I think this one's okay. Because I think going into tech earnings season, I think you're probably okay holding this one, to be honest with you. I think you go from 60 to 70. If you look at a weekly on this one, where were we back in December 2021? We're at 82. Now, it doesn't mean that you'll get back to 82. Look, you had a reverse split 2-for-1. This isn't reverse splitting anytime soon because it's still got it. You just had a golden cross on it. So again, that's a weekly. You don't want to hold this one for a long time. If you have any questions, hit me up on Linktree. Tomorrow, paid newsletter. Any other questions, hit me up. Okay, see you, bye. Emilian, are you still here? If you are still here, I will go over SPY. Hold on one second. Emilian is not here. And I'm sure he wants me to look at 0-day options on SPY, which is not something I do. Invested in my heart. What'd you invest in, Brandon? Share. Airdrop. Is it IONQ? Where is this? Where is my? There we go. I don't think I did an hour. Oh, come on. I don't think there's any reason to jump into anything. Emilian is not here. Guarantee Emilian is gone. I mean, I know he wants me to look at SPY, but I don't know why you'd want to look at SPY. I mean, SPY doesn't look too strong. I'm not a big SPY fan. I'm a bigger fan of VOO. But, I mean, they both look exactly the same. I don't know why. Maybe it's because my last name's Vaughn and it's a V. But, okay, I'm going to edit this and I am going to watch the Masters. Paid newsletter tomorrow. Maybe a meta pullback. Dude, it's 1%. Let's see. I think DKNG, so I haven't seen a big pullback on DraftKings. I still own DraftKings. And I'm in it more for the valuation and the cash flow positive portion. I think this one, again, I said buy it and sell it under 30. I think this moves to 40. I think this line moves actually to 40. But Eli, algorithm has you out. But when you look at a weekly, it's still moving. I mean, you just got that golden cross. I'm not out. Let's see what Seeking Alpha says. I bet they have a hold on it. Valuation. It's gonna make money. I'm in it because it's gonna make money. I like the momentum of it. It's 9 out of 33. Supergroup Holding Limited is number 1. That one actually just got to a strong buy. What's the market cap of this one? Oh, it's pretty big. Let's see what the bulls say about this. Bulls and bears. They don't have it. Doesn't pay a dividend. The chart, I mean, it's down 10%. %6 year to date. This is an interesting one. Over DraftKings. Let's look real quick. Select symbols. Wow. I mean, DraftKings is the winner over this one, even with the bad valuation. I am not getting 420'd. I sit on the couch and I watch golf. But I am going to go watch it now. I don't know. Let me see. Am I down? I'll check the indices against my account. I checked 420s on a Saturday. So I don't think I'm going to do edibles. I might do it on 419. If I can get some. I don't think I have any. I have to get my cousin to send me some lollipop. I only do edibles. I don't smoke. I refuse to put stuff in my lungs. Let me see. And nobody signed up for Seeking Alpha yesterday. F everyone. Maybe it's delayed, though. Again, I don't get a list. I just get a number every day. It says 0, but it might be just still updating. Let's see. Oh, wow. Wow. I'm up 0.5%. How the hell is that possible? It's got to be Apple. Yeah, Apple's up another 1.64%. Wow. It pays to have your Eli. Do I think you can still get into TSM? I think so. And the reason I think so, here's what you have to know about TSM. I think you're still good in TSM, even though you're at these 52-week highs, 158, you're at 144. It's still a strong buy. You're just going to have to put up with the political fever. I don't care who's in the White House. I think you're still going to have to deal with China taking Taiwan. It's ranked number 2 out of 65 in this one. Is SMC Qualcomm's number 1. Again, Taiwan Semi, I can't argue. I don't think it's too late. I mean, 144. Let's go and look at. It's in the core portfolio, and it's done really well in the core portfolio. I put this in as support, I think on the weekly, if I'm not mistaken. Did I put it in on the weekly? Yes. So that 141 was the all-time high. It was a resistance level. You broke through it. That now turns into support at 141. You're trading at 144. I would probably wait till next week. I don't think there's any reason to get in today. But I think if you dip down below that 141, I think you take the plunge. You've still got, some. The problem is look at the MACD's way up there. The RSI is at 69. Your earnings are coming up on April 15th. So next week, they announced deliveries already, and it's record. So I would expect them to kind of blow it away on earnings. Take an opportunity when it's down to buy it. That's my thought on it. Am I putting money into it? No. I do own it in ETFs, though. I know that. So, okay, I'm out of here. It's Masters time. Have a great day. It's nice outside, too. I'm